Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting a quite significant historical monthly support and demand area. From here, in fact, all this previous rejection to the upside was created. At the moment the market is testing this exact same zone, has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this level. We can also notice how increasing this move to the upside, the market has started completing this M pattern. In fact, when the market was here, it first created a rejection to the upside, then a correction, then it tried continuing higher. However, it failed and rejected to the downside. That signaled the creation of this M pattern, which is a quite common pattern in the market. And usually when you have such a pattern, there's an increased probability of seeing a potential rejection to the upside, in my experience, for a completion of the pattern at the neckline. You can see, let's see if we find, for example, an example of this pattern. We can see one clearly here. We had the creation of this M pattern. The market then went and completed the pattern at the neckline. We can see another one here. The market then went and completed the pattern at the neckline. So also another one here. So as you can see, this is a pattern that the market likes to create over and over again. So it's not every time but there is an increased probability when there is such pattern of seeing a potential completion at the neckline. And in fact, what we can notice is that already the market is starting to create this rejection to the upside. So there is a good probability of seeing a bit more bullish price action for the market to go and complete this pattern at the neckline, which would be this previous resistance turn support here on the monthly time frame. So from a high time frame perspective here in the monthly, this is what we have. Let's keep it in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the price action is quite clear. We have a market which started this move to the downside with very aggressive bearish price action. Then the market started showing signs of deceleration. So first we had only big red candles. Then now what we can see is that every time the market creates a move to the downside, immediately there are a few green candles showing how buyers tend to re-enter this market every time that we see a push lower. Now, this increases the probabilities of at some point having a breakout to the upside, which in fact seems to be exactly what happened here with this massive candle. So it seems like right now we are breaking out from this deceleration pattern after this massive drop to the downside. So the weekly time frame as well is quite clear. Let's drop down on the daily time frame and see what we have. Now, here on the daily, I did speak about USDJPY quite a few times. I spoke about it when the market was here. I explained all the reasons for which we could expect first this correction and then the rejection to the upside. In fact, that is exactly what the market did. Then when the market was here, I made a full breakdown explaining all the reasons for which we could expect this push lower. And again, that is exactly what the market did. And then what we had after that is a massive push to the upside. And by the way, I will link in description these previous analysis, so you can go and check them out for more free education. But now that the market has created this massive push to the upside, what kind of structure we currently have? Well, before we dig deeper into what we have here from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing on the JPY. Now, the first thing to keep in mind is that if we're looking at the data for the JPY, we're actually already looking at JPY USD because all currencies on the spot are traded against the USD. And what we can see is that for JPY USD, net positions with the last report have been decreased. We went from 66k net positions down to 56k net positions, showing how institutions are once again moving back to the kind of bearish side for the JPY. We can see in fact how 9.1k longs got closed with the last report and 62 shorts got opened from an institutional perspective on the JPY. So if institutions are closing the longs and opening shorts on the JPY USD, it means that they are essentially longing USDJPY, obviously. So there is no surprise that as institutions are longing USDJPY, the price has been rejecting to the upside. That is what you would naturally expect. So in a situation like this, let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now, back to the analysis. So from a daily perspective, as the market is breaking all structure, we have to identify the movements in the market. The last impulse is from this low to this high. This is the impulse to the upside that created a new higher high, so higher than the previous one here. The next natural step would be for the market to create a correction and then print a higher low before then printing a new higher high. That is the natural development of an uptrend. When you have an uptrend, you have a series of higher highs and higher lows. Every time the new higher high is printing a new high, and every low is printing a new higher low. That is the definition of a textbook uptrend. So the next natural step would be for this market to provide a potential correction before then continuing higher. It is also important to keep in mind that in creating this move to the upside, the market has also printed this overextended W formation, which increases the probabilities of seeing first a correction and then the continuation to the upside. So in a situation like this, approaching the patterns and movements of the market one at a time, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market at that point, I wouldn't be surprised to see a potential rejection to the downside, completing this overextended W formation with a retracement at least to the 0.32 of the Fibonacci taken on the impulse leg, and then the continuation to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.